seen CAGNY going on this week. That, of course, the major food conference typically happening in person. New York, in the name right there. This year, of course, happening virtually. General Mills presenting a couple of days ago, and the company's CFO, Kofi Bruce, joins us now to discuss. Kofi, great to have you on the program this morning. Thanks so much for joining. I want to start with guidance, and I guess really the question, we've talked to a number of executives about this, the ability to even offer guidance in this kind of environment. How did you guys kind of get there over time through the last few months to be able to say confidently enough to investors, hey, here's where we think we're headed, over the next quarter, and you were able to affirm, second half outlook as well?
Yeah, that's a great question. Thanks for having me on, Myles. Look, I will certainly be the first to concede we're in an environment of high uncertainty. So as we thought about this year, and frankly, just even the quarter ahead, we have been governed by a philosophy that the demand environment will be what it will be. Our job is to be competitive regardless of what that demand environment is. And our philosophy has driven us also to focus on making sure that we maintain margins as we do that, right? So there are a lot of puts and takes. Higher volume puts pressure on our supply chain. The need for external supply chain capacity to augment our internal capacity has put additional cost pressure on the business. And we are continuing to make investments in capabilities that'll help us when we come out on the other side of COVID. So higher operating costs, but offset by higher leverage as we're getting a lot more operating leverage out of our assets. We certainly feel confident that demand will remain elevated for at least the next quarter. So we were comfortable giving an affirmation of guidance here that has us expecting to deliver a flat margin profile on strong continued growth. And we did affirm, obviously that our quarter three would look like our quarter two top line on the basis of those expectations.
So Kofi, at the conference, you outlined that you're focused, you're putting a lot of focus and investment right now on 5 platforms, things like cereal, pets, and ice cream that collectively represent about 45% of your business. One brand that was left off that was Yoplait, and I know that's been a more challenging business for General Mills in recent years. The yogurt category is very, very competitive. Are you open to divesting that asset? Because I think you and I both know that the M&A market in food right now is pretty hot.
Sure. Well, I think it's important to just dial back to what we talked about. We talked about global platforms and local gems. And the global platforms, as you rightly pointed out, about 45%. But another 35% sitting in what we would call local gems. And realistically, as we look at Yoplait globally, it is really actually more of a multi-local category, meaning the dynamics of that category differ from market to market in ways that it do not on some of those global platforms. So our investment strategy behind that business reflects the fact that we need to tailor our investment needs to the growth prospects in each of those markets. I don't want to comment, obviously, on any specific parts of our portfolio with respect to divestiture, but I would just reaffirm that at CAGNY in 2018, we did indicate that we were going to review up to 5% of our sales for divestiture. That is still ongoing, and as a reminder, shortly after that CAGNY 2 years ago, we purchased Blue Buffalo for $8 billion in one of our first big portfolio shaping moves in a number of years. So we've been tremendously pleased with that. We're focused on continuing to make that successful. It's growing like gangbusters this year, up double digits through the first half of the year. So a really strong business for us, even in the pandemic. And we will continue to review our portfolio for opportunities in this environment.
Kofi, we've been talking to a lot of food company executives as of late, and one of the main questions we've been asking them is about pricing power. And so I'll ask you the same question. What are you seeing on that front? What kind of input cost increases are you seeing as well that then might lead you to start to raise prices?
Sure. No doubt. We get a number of questions about the spot markets, in particular for some of the key commodity inputs. that impact things like packaging and freight and certainly grains, which we are a big user of. And, I think it's important to note that if I look back over the past 10 years of our business, even if just back to 2019, we had an inflationary environment that was just on the high end of mid-single digits. We were able to offset a good amount of that headwind through just our productivity on cost of goods sold. So we run about 4% productivity on average annually, sometimes a little more. And that offsets most of it. And then we were looking only for 1 to 2 points of price realization in 2019, and we got about 2. So we were able to more than offset that and deliver some modest margin expansion in an inflationary environment. So I think it's important to note that we have multiple levers to deal with inflationary pressure. First, on our productivity. Second, pricing. But I think in addition to pricing, it's important to note we think about mix and management of mix, our promotion spending, and being very targeted and efficient with that. And the price packs. So if you think about the sizing and size versus price relationship in the category, those are all levers you can use to protect prices and offset inflation in an inflationary environment.
All right, certainly interesting times in the packaged food business right now. Kofi Bruce is the Chief Financial Officer over at General Mills. Kofi, great to get your thoughts this morning. Thanks so much for joining the program. Hope we can talk soon.
Thank you, Myles.